So on my 5 minute strategy, this is what you are going to be looking at. So we see that this market, I'm using this to be my 30 EMA. I'm using this very one as my 30 EMA, as my moving average. I'm expecting the market to be bullish on this moving average. As far as this market stays above this moving average, I'm going to be buying, I'm going to be taking a buy trade. So you can see this market breaks structures to the upside. The market printed a leg right here. It breaks it to the upside. You can see this market breaks structure to the upside. It created a high, created a low, created another high. It created a new low. This supposed to be a low, but the market was not able to push up again to give us another high. It came back down and took out this one, and then it tapped into this moving average. It touches the moving average. On this moving average, once the market got in contact with the moving average, you are to look for an engulfing candle at this spot. You are to look for engulfing candle. Once you have engulfing candle, you place your trade at the bearish candle that gives you an engulfing, that gives you a bullish pattern. You place your trade right there and you go for 1 to 5. The reason why we are going to 1 to 5 is you have 5 days in a week. If you throw 5 times and you lose 5 times, then if you win once, you can be able to make out all the losses you have. So this is on my 5 minute chart. This is the first one we are going to be looking at. This is a bullish trend. Then the second one we are to be looking at is the bearish trend of this same scenario. So this is the bearish part of this. We can see that this market has been going down to the moving average. The market right here is bearish. The market is bearish. As the market was pulling back down to the moving average, it touches the moving average and breaks structure. So as the market breaks structure, this becomes your point of interest. This point becomes your point of interest for you to take your trade down to the downside. You take your trade right there to the downside. Another scenario is when the market comes into the moving average, it printed an engulfing pattern, which is a bearish candle along with, you know what an engulfing pattern is. I'll You can check my other videos. You see an explanation when it comes to engulfing pattern. So another scenario is when the market touches this moving average, you saw an engulfing pattern on this 30 EMA, then you take your trade and you target same 1 to 5. This strategy is 70% accurate. Let's go to the chart. So guys, don't forget to subscribe, turn on notification bell so that whenever I drop a new video, you get notified. So right here, I'm using gold charts. You can see this market is on. You can see how separate they are on this 30 EMA. You can see how they are on the 30 EMA. This is 30 EMA. You can see how they are. It's very, very, very bullish. It's separated from the 30 EMA, showing you that this market is very bullish. So as the market breaks structure right here to the upside, is for you to wait for the market to come into this 30 EMA. As the market come in contact with the 30 EMA, is for you to look for an engulfing pattern in this zone. You can see the market touches the 30 EMA. There was no an engulfing pattern. It go below the 30 EMA, not engulfing pattern. It tried again, no engulfing pattern, and finally the market got to an engulfing candle right there. So as the market printed the engulfing candle, is for you to place your trade. You place your trade at the bearish candle, which is this one, not at the close of the engulfing. You place your trade at the bearish candle. Your stop loss come few pips and you TP your 1 to 5, like I said. TP your 1 to 5. That is your 1 to 5. So the same thing happens here. You can see the same thing happens here. The market comes again in contact with the 30 EMA. You can see it come in contact with the 30 EMA, and it gives you an engulfing pattern. At the bearish candle, like I said, that is where you place your trade and you go see how the market has been rallied to the upside. The market come to the 30 EMA again, zoom out. You can see this market, we didn't have any touch on the 30 EMA. At this point, there was no touch. There is no touch. The candle did not touch the 30 EMA before this engulfing pattern happened. So we did not take any trade at this zone. The market comes back again. It gives a contact with the 30 EMA. You can see at last we see another bullish engulfing. We see an engulfing pattern. Then we place our trade at the bearish candle right there, and you can see the market has been rallying up for a very long time. That is for the buy trade. Let's check out our sell scenario. So for our sell scenario, we can see that this market is bullish. It's bearish. The market is bearish, breaking structure to the downside. The market is bearish, breaking structure to the downside. So the only trade we are going to be taking is for us to make sure we take a sell trade. You can see the market is bearish. It's print this structure, as in it closed below the 50 EMA. It still comes back down again and tell you that I'm very bearish by closing below again. So this tell you to make your decision. So as the market go back to the 30 EMA, as the market went back to this 30 EMA, you are to look for your engulfing pattern. You can see this market happens here. This is this thing. There is a pierce. This candle pierced through without an engulfing pattern. It printed another inside candle here. It printed another one. That very candle shows you it's an engulfing pattern, but it did not engulf this very one. So you can either place your trade right right there. You can either place your trade at this candle, or you wait for the market to close below this candle, because that is the highest candle that happened. So as the market close below that candle, you can take your trade, or you wait for it to pull back to the so that is where we found our engulfing. Sorry. So as the market pulls back to this 30 EMA, it pierced through it, and we are still looking for our engulfing pattern. You note this is the high this bullish candle gone to, and here is the low before this candle finally closed below this green. So we place our trade right here at the green candle. That is the green candle. We place our trade at the green candle, and you can see the market comes back in the future and tap into the green candle and sell off. So that is the bearish side, and sell off. You take your one to you've taken your so for the bearish scenario, you can see this market has been bullish. The market has been bullish to the upside, but at the cease, the market has been bullish to the upside. Before we know, the market closed below the 30 EMA. The market closed below this 30 EMA. After closing below this 30 EMA, it creates a structure, and it created a structure and still closed below it. That was the last low, and here was the structure it created. Around this point was where it creates structure, and it closes below it. If I turn it to a line chart, it will look. You can see it created a structure there, and it created a low right there, and it closed below it. This shows you that this market is ready to go down. So that is when you wait for the market now to comes back to the 30 EMA. Once e get contact to the 30 EMA, then look for an engulfing pattern. The engulfing pattern happens right here, and you place your trade at the green candle. If it is bearish, you could place it at the green candle. If it is bullish, you place it at the red candle. So you place your trade right there. You go for your 1 to 5. Your stop loss come few pips above the zone, and you go for your 1 to 5. 1 to 5. Oh, this is almost 1 to 7. We don't want to be so greedy. That is almost 1 to 16. But you go for your 1 to 5, which is right there. So guys, if you are watch up till this point, do me a favor by tapping on the likes button, turn on all notification bells so that whenever I drop a new video, you'll be the first to get notified. As I sign out, I remain Aqua FX.